Hi everyone, and welcome back to the channel. As we get closer to the end of this year, we wanted to share some tips and tricks again when it comes to investing and filing your taxes. Today's video is part one of our new series where we'll be covering the basics of how taxes work, how to lower your taxes owing or get a bigger refund, and strategies on how to strategically save and plan for retirement at any income level. So let's start things off with the basics of how taxes and government benefits work in Canada. In Canada, we work on a progressive tax system, which basically means the more money that you make, the more in income tax that you have to pay. Many of the government benefits are also based on income, except with benefits, the more money that you make, the less the government will pay you in benefit income. Not all benefits work like this, though. There are many programs that are available to higher income earners as well, which we'll be covering in an upcoming video. Without overcomplicating things, though, let's take a look at how our tax system works by looking at two individuals, Steve, who makes about $50,000 a year, and John, who makes $110,000 a year. Now, although their incomes are very different, there are some similarities between them. They each have two kids, are single, and live in the same community in Ontario. On top of that, neither of them has any type of retirement or pension program through their work. At different levels of income like this, how they save for retirement will look a lot different. We'll be showing you some strategies they can both use later in this series. For now, let's just see how much in tax they'll each have to pay and how much they can get in benefits. Based on the amount of money that Steve made this year, he'll have to pay about $7,600 in taxes, leaving him with a little over $42,000 to live off of, compared to the $50,000 that he made at work. So on average, for every dollar that Steve makes, he has to pay about 15 cents in taxes to the government. When it comes to taxes, both the federal government and the province that you live in charge you tax. So when Steve files his taxes, that $7,600 will cover what he owes in both provincial and federal taxes. Depending on what province you live in, the benefits that are available to you and the amount of tax you have to pay can look a lot different. For example, Steve lives in Ontario, but if he lived in Nova Scotia, he would owe closer to about $10,400 in taxes, $3,000 more in provincial taxes, even though he made the exact same amount of work. Here's how different your taxes can look across Canada. Compared to Steve, John is in a much higher income tax bracket. Remember, the more you make, the more tax you have to pay on each additional dollar that you earn. At $110,000, John will owe almost $28,000 in taxes, leaving him with about $82,000 in after-tax income. So for John, for every dollar that he makes at work, he has to pay about 25 cents in taxes to the government, compared to Steve, who pays about 15. When looking at benefits, both Steve and John have children, and in Canada, the provincial and federal governments provide monthly payments to parents to help with the cost of raising them. For Steve, he can expect to receive about $1,100 combined per month in child benefits from both the federal and provincial government. Now, there are other government programs that Steve really should be applying for, but we'll go through those in an upcoming video. John, on the other hand, earns much more per year than Steve. So remember, he will not only pay more in taxes, but he'll also qualify for less money in government benefits. At John's income level, he no longer qualifies for the Ontario Child Benefit, and the amount he gets from the federal government will be much lower. The Canada Child Benefit is just one of many government programs available to Steve and John, so stick around as we show you some other benefits that you can apply for, ways to maximize your RSPs and TFSAs, and tax tips for singles, couples, and families with children. Thank you for watching, and we'll see you in part 2 of this tax tip and investing series.